Hey everyone, welcome back to Corporate Decoder, the place where we peek behind the curtain of corporate America, and today we're diving into Armour Residential, REIT Incorporated's latest filing a report that might just hold some valuable clues for investors, and those curious about the real estate investment trust landscape, get ready because this isn't just about numbers. It is about the story they tell. So what is the big deal with this filing? It essentially gives us an update on Armour's financial status and how their business has been running as of the 12th of December 2025. Think of it as a snapshot of their operations and financial health at a very specific moment. Let's not forget to mention our Discord community linked in the description below, where you can connect with other finance enthusiasts and share your thoughts. Now, when we look at Armour Residential REIT Incorporated, we're talking about a company that deals in real estate investments. They're not just buying and selling properties, they're often dealing with mortgages and other income. Generating real estate assets, this particular report highlights their preferred stock, which is a type of stock that comes with certain privileges over common stock, like getting paid dividends. First, in this case, it is their Series C preferred stock. And then we have their common stock, which is what most everyday investors think of when they hear about stocks. This is the regular ownership stake in the company. It is important to see how both types of stock are represented because it tells a story about the company's capital structure and who has priority in terms of ownership rights and claimed assets. The date, the 12th of December 2025, is crucial. It tells us the period this report is covering and what kind of information we should expect to find within its current report, meaning it's detailing significant events that have happened recently. Let's talk about their preferred stock this series. C cumulative redeemable preferred stock is a significant part of their funding. Armour is essentially promising investors a fixed dividend of 7.00% on this stock, and it is redeemable, meaning the company can buy it back at a certain price. This is a way for them to raise capital while offering a stable income stream to preferred shareholders. On the other side, we have the common stock. Normally this doesn't have a fixed dividend, but it represents ownership in the company and potential for growth, the par value. Here is $0.001, which is a very small nominal value. It is mainly a legal designation and doesn't reflect the market value of the stock. So Armour Residential REIT Incorporated is the entity reporting. Here they are incorporated in Maryland. And if you are an investor or follower, you'd likely know their stock symbols: AR for common stock and AR pre-C for their series. C preferred stock, these are the tickers you'd see on the New York Stock Exchange. This section is all about Regulation FD disclosure. It basically means that if they release any information to the public, it has to be for everyone at the same time. Not just a select few. This filing includes a presentation from the 12th of December 2025, which Armour produced to give an update on their financial standing, business, and operations. It is like a mini investor relations update rolled into an official report. The exhibit section tells us what extra documents are attached to this report. The most important one for us is Exhibit 99.1, which is that presentation dated the 12th of December 2025. This is where we'll likely find the meat of the story, the details about their performance. And Outlook, the other exhibit, is an interactive data file which helps computers read the financial information. Lee. And finally, we see the signature from Gordon M. Harper, who is the Chief Financial Officer. This tells us that the report has been officially reviewed and authorized by a top executive. This is standard procedure for SEC filings, ensuring accountability. Now let's get to the really interesting part. What does this presentation attached as Exhibit 99.1 actually tell us about Armour Residential REIT Incorporated? Since this is a current report under Regulation FD, it means they are sharing information that could be important to investors. This presentation is likely a deep dive into their financial position, business, and operations for the period ending around December 2025. Looking at a presentation from the 12th of December or December of 2025, we want to see where the company stands financially and operationally. For a real estate investment trust like Armour, the key metrics usually revolve around their portfolio performance, their interest income and expenses, their leverage, and of course shareholder returns. They've likely provided an update on how their mortgage-backed securities or real estate assets are performing under current economic conditions. Are they earning more interest or less? Is the value of their portfolio going up or down? It is important to remember that real estate investment trusts are sensitive to interest rate changes. If interest rates go up, their cost of borrowing increases, which can squeeze their profits on the flippy side if they own a lot of higher interest rate assets. They could benefit from rising rates. They are essentially trying to make a spread between the income they generate from their assets and the cost of financing those assets. What we are looking for in this presentation are key financial numbers, often presented visually in charts and graphs. We'd be scrutinizing things like their net interest income, which is the core profit driver for a REIT. To also look at their debt levels and how well their assets can cover that debt. This is often measured by metrics like debt to equity ratio or interest coverage ratios. Let's say, for example, they report a significant increase in their interest expense. This would signal that their borrowing costs have risen substantially, perhaps due to Federal Reserve rate hikes. This could mean they are paying a lot more to finance their investments, and if their income from those investments isn't growing as fast, their profitability will suffer conversely if they show strong growth in interest income. It suggests their investments are performing well and perhaps they are benefiting from a favorable interest rate environment. Another critical aspect for a REIT is their dividend payout. Our Residential REIT Incorporated is known for providing dividends to its shareholders, so we would be checking if their financial performance supports the current dividend levels, or if there are any indications of a potential dividend cut, or increase. A healthy dividend payout is often a sign of a stable and profitable REIT, while a threatened dividend could be a warning sign about underlying financial distress. We would also be interested in their overall portfolio composition. Are they heavily invested in residential mortgages, commercial mortgages, or other types of real estate assets? The risks associated with each of these can vary significantly, for instance, a heavy concentration in resi. Title mortgages might expose them more directly to housing market fluctuations, or homeowner defaults. This presentation is where they likely offer insights into their strategy. For example, have they adjusted their portfolio to mitigate interest rate risk? Have they acquired new assets or divested from underperforming ones? Understanding their strategic move helps us gauge their future prospects and how they are navigating the complexities of the real estate market. Now let's consider the broader economic context of December 2025. What was happening in the world that might affect a company like Armour Residential REIT Incorporated were inflation rates. High were interest rates on an upward trend was the job market. Strong were there. Any global events that could impact real estate markets, knowing this external environment helps us interpret the numbers Armour presents. So in essence, this report and its accompanying presentation are a window into Armour Residential REIT Incorporated's world. It's a chance for us to see how they are performing, how they are managing their finances, and what their plans are for the future. It's not just about reading numbers, it's about understanding the narrative they create about the company's health and direction. Looking at these numbers and the typical structure of REIT reports Armour Residential REIT Incorporated is likely trying to present a picture of stability and income generation for its investors. However, the real estate investment trust sector is inherently tied to interest rate movements and broader economic health. If rates have been volatile, or if there has been economic uncertainty, then Armour could be facing headwinds. The Series C preferred stock with its fixed dividend suggests a commitment to providing a certain level of return to those specific investors. A key risk for any REIT is leverage, that is how much debt they use to finance their operations. If they have high debt and their asset values decline or their income streams falter, it can put them in a precarious position. This filing and presentation would likely give us clues about their debt management strategies and the health of their collateral assets. The opportunity for Armour lies in their ability to source attractive investments and manage their interest rate exposure effectively. If they can acquire properties or securities that generate higher yields than their borrowing costs, they will be profitable and able to sustain or even increase their dividend payouts. In conclusion, Armour Residential REIT Incorporated's filing on the 12th of December 2025 provides a crucial update for stakeholders. It allows us to assess their current financial standing, their operational performance, and their strategic direction, while the common stock offers growth potential. The preferred stock offers a more predictable income stream. The key takeaway is to analyze their interest income versus interest expense, their debt levels, and their dividend sustainability in the context of the prevailing economic conditions. Alright, that is our deep dive into Armour Residential REIT Incorporated's latest filing. What do you think about their financial health and their strategy based on this update? Do you see Armour as a solid investment, or are there warning signs? Let us know your thoughts in the comments below. If you found this breakdown valuable, please hit that like button and subscribe to Corporate Decoder for more insightful analyses of corporate documents. Don't forget to join our growing Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next Decode.